But then the more I thought about it, and the more I read and kind of educated myself, there's always that theory of not putting all your eggs in one basket. All right, welcome back, episode 4.
Yes, sir.
Episode
Here we go.
4, awesome. How's it going?
Pretty good.
How's the week for you?
Yeah, no, it's pretty good. For me personally, spent most of my week getting things at Madison going, drawings, had our Clinton in there to get the drawings going for that property, working on JV agreements, opening bank accounts, all that kind of stuff, just getting organized. And
Nice.
yeah,
So this is for a property that you were going to hold, right? You're going to do a duplex conversion and hold it?
Yep, the one we were talking about kind of last week where I got a JV partner who's going to go on title. So
Yeah. So are you doing that in your personal name or in a corp?
I don't know. That's a good question because I'm still trying to figure that out because I'm not on title, because I'm not on the mortgage. I can do it in my personal name.
Yeah.
So and each year we're not really going to be showing a lot of profit.
Right.
So from a tax implications, it doesn't really help. But I have the corporation open. So I don't know. I'm still working on that because it's like, does it make more sense to just put it in the corp from a liability standpoint?
Yeah, I think it seems like with rental properties, that's that's what it really comes down to is the legal liability perspective, because from a tax perspective, there really isn't much benefit.
Well, yeah, not for holding, right?
Yeah,
but
exactly.
for the flips, it's like a no-brainer.
For
to
the
put in
flips, yeah,
corp.
no-brainer.
But yeah, so just trying to figure that out. And I mean, really, it's just a matter of how I word it on the JV. Do I put my corp there or my name? And, because again, it's not something I'll have to worry about or deal with
Yeah.
for a while. But have our joint account set up between me and my partner too, which is always nice to keep things fresh and clean and
Nice.
organized. So working on that. And then I had working on a bigger commercial property, a 3-unit, $7 million property with a 4.58% cap rate. So
Wow. In Durham?
no, it's actually in Burlington, and so it's a little bit interesting one. That the tenants are TD Bank, Subway, and there's a vacant unit that they're trying to get a chiropractor in there. So we have an investor buyer who's interested. They kind of came to us and said, they wanted a 6% cap rate with essentially they wanted hands off, really high quality tenants was their main goal, right? So someone like a TD Bank that, they're locked into a commercial lease for 5 years, it's as good as done as far as, getting the rent and stability. So
they want a 6 cap after a bit of stabilization? So once you bring in, let's say, another tenant?
No, they want it right from day one, which
Okay, so how would that property work if it's a 4.85 now?
Well, it's like every investor,
Yeah.
It's 4.5 right now, 4.58 at 7 million. At about 6.4, it ends up being a 5 cap. So yeah, we'll have maybe a little bit of negotiations. I'm assuming our investor is going to want to go in probably at around 6.4, 6.4, and the seller wants 7 million, right? So, and they're making good money. They have good quality tenants and newer building. Like it's as hands off as you can get, right? So I actually think the 4.5% cap rate is really strong.
It's pretty good.
Yeah, it's an off-market deal. You know what I mean? So it's got some unique, interesting caveats to it. There's a first mortgage in place for 4.5%. So it and it's only for about 3.5 million of the value of the property. So he either needs to buy that out, or if he wants us to assume that, then we're going to need a VTB because my client's not putting down 3.5 million, doesn't want to put down 50%, right?
Yeah.
So, it's been interesting. We're kind of going to go check. We're going to go check it out Saturday actually and take a peek at it and the area and stuff, and kind of make a decision as to going forward with an offer. So, been spending most of my week kind of working on that, and having phone calls with that and seeing if we can make it work and make both sides happy here. But we'll see how it plays out.
Yeah. Awesome. And then Ajax property. Any progress on that?
Yeah, I mean that's supposed to be closing Monday, so we're
Yeah.
but
This coming Monday.
yeah,
in
but
4 days.
we're going to be pushing it 2 weeks, not from our end, from the seller's end.
Yeah.
They're taking care of things, so yeah, working on getting insurance in that actually today, and getting all that sorted out, and just kind of due diligence from not due diligence, just minor tasks like getting all the utilities switched over and things like that, and we're getting our drawings done there Monday as well. We can't start renovating on that one March 1st, right? Because remember, the owner's going to be still in there till March 1st.
Oh yeah.
And we're holding back.
You're holding back.
Yeah, we're going to hold back some money. So they're, so I mean, we can't really get our hands in there until March 1st anyway. So we're kind of focusing on Madison, which is going to be quicker or more this month as well. So, it's kind of one of those getting prepped for digging in and stuff.
Yeah.
So,
yeah.
How about you? What's going on with you?
Pretty good. Things are moving well. So we have Central Park. So that duplex conversion is moving well. Upper unit is, I would say we're 85-90% done. It's looking really sharp. So maybe actually one day during the podcast we can do like a tour of all the properties that we have. So that's going well. The challenge with that property is the lower unit. We're gonna submit revised drawings because we want to essentially add in a second bedroom into the basement, and then we're gonna need HVAC drawings done because
so you bought that with drawings already in place, right?
Yeah. So we bought that property. The previous owner had already started the conversion process, but their layout wasn't going to give us the best after repair value. So we wanted to, update that and make sure that we do get the highest after repair value, which meant, adding another bedroom in the basement. So we have to submit revised drawings for that. And then also HVAC design as well. So we're going to need to update our HVAC, so our duct, because we don't have clearance underneath it. And for us to reduce the duct, we need to submit drawings for that. So that's been delaying us a bit.
Right.
Besides that, no major delays. Besides that, then we have floral. Floral's moving well. I think on Monday we'll start flooring upstairs. Flooring, baseboard, shoe mold, and then paint. And then besides that, kitchen. So I'm hoping that floral, we can finish the upper unit of floral in 3 weeks.
Nice.
Maybe. So that's pretty aggressive, but
kitchen's on order, or?
No, so the kitchen's going to be the last thing. So I know kitchen will take 3 to 4 weeks. So my goal is to bring kitchen design guys in on Monday, get a design and put in an order, and then have it delivered within. It'll kind of be the last thing that goes in.
Yep. Cool.
So that's that. And then on the flip project, I was able to get financing for it. So
cool.
I had 2 options. I had an option through a broker. So it would have been a private mortgage or a private lend. So one option was through a mortgage broker. Rate was 8%. There was a 2% finder's fee. I was looking at holding for around 2 months. So my total cost of borrowing would have been around $14,000, which is quite material in my opinion.
Yeah.
So then I just reached out to my network and the people I know through social media, just through different investors that I've met, and someone was willing to lend me $400K.
Come on.
For
that's amazing.
Total borrowing cost of $9,000.
Awesome.
So I'm saving around $4,000 or $5,000.
Yeah. So how does that structure going to look between?
It's going to be a promissory note.
Okay, cool.
I know the person.
Yep.
They know me. They know the project. They know what I've been working on. So there's a trust factor there.
Yeah, because $400K is
it's a lot of money.
It's a good chunk of change for one person. Yeah.
Yeah. But what I told them was this is going to be a two-month process.
Yeah.
After 2 months, I'll have personal money coming in, so we'll kind of settle them right away, and
yep.
And it's good. It's it's the first time they're lending to me, and I want to give them assurance that look like, in 2 months you're going to make $9,000, which is good money.
Yep.
In my opinion, it works out to be almost around 10%.
Yep.
But it's still cheaper than the alternative option. Than the other.
Yeah, a lot of the fees and the
I find the finder fee just kills you. Yeah.
Well, it's like it's because it's 10% then, right? You have your 8% plus 2, but then that's only for 2 months.
Yeah.
So I don't know. Yeah,
Pretty aggressive.
You got to work the math on that because it's like it really ends up. I think it disguises it because it penalizes you if you close it quicker, which you're planning on doing, right?
Yeah.
So
Yeah.
just a straight percent, 10% is much cheaper than.
Yeah.
So,
I kept it simple. I just looked at overall cost of borrowing. Whatever was cheaper, that's what I'm.
That's what I find. Like even I was speaking to an investor this week and who wanted to lend $100,000 and was like, Cam, break it down to me as simply as possible. And it was like, I said I'd give him 8%. I said, look, you lend 100, you get 108 back. Simple as that. If it's 6 months, divide by 2, cut it in half, right? So. I find like if you start using amortization schedules, if you, have finder's fees, and then like people just their minds get a little bit, overwhelmed, right? So it's,
Yeah. So that's that. I'll do a revisit on the flip property next week to kind of get a better sense of
What do you wanna
what's
do with it?
required. Yeah, exactly. So that's that. Anything else you want to talk about there?
No, I think that's pretty good. I mean, I love it. Let's kind of go to
Cool.
what we're seeing in the market.
Yeah, you want to go to the market? Should we? You want to give a brief overview as to what you're seeing while I set up here? We're going to try something different.
I mean, it's the same. We're episode 4 here, and I feel like we're singing the same old tune of wow.
Yeah.
Just craziness every morning. I pour my coffee or grab my coffee and sit and open up and look at
Log
the
onto
results, and I'm just spitting
MLS.
out coffee, every morning going, are you kidding me?
Yeah.
And it's hard to put into words to people or viewers or listeners that, what we're actually seeing. But I mean, for buyers right now, again, I haven't seen even 2016. This is pumping up higher and moving up higher than 2016. It's a little bit. It's getting scary to me, and I'll let you talk about some of the prices and properties themselves.
Yeah.
But no,
Sure.
it's it's crazy. Well, I'll say this to you. I had the one property you're going to talk about on Lowell, right? That was probably the most surprising one that we had. So I was pitching this to an investor. It was listed at $499, and I said I would buy it at $540. I said $540 makes sense to me. $100,000 renovation, you're in for $640, and it's worth $720, $730 when it's finished as a nice legal 2 unit, right? And even my investor was hemming and hawing and going like, okay, and wondering if 540 was a good number to put it in. And what did it sell for?
$713.
As is. $713, needing $100,000.
Madness, absolute madness. All right, should we get into this? Okay.
It's crazy to me.
All right, so let's look at some numbers. So we're gonna try something different. We're gonna hop onto my computer right now. So I have here 6 properties that we've been keeping an eye out. As you can tell, they sold between January 22nd and January 26th. First one is an absolute shocker amongst all the other ones, but what's crazy about this one is that this house, which is in a good neighborhood, we'll give it that, but it's a 1-bedroom upstairs, 1-bedroom downstairs house. 223 Greenfell. I don't even know if we can like talk about addresses and stuff, but fuck it, let's go for it. So just quickly going through this property, really old property. Can you argue that it's livable as is? Sure, you can, but if you're buying it as an investment and you want you want tenants to essentially come and live here and pay you a premium, you're gonna have to do some serious work here. And this property was listed for $449 and it sold for $638. Keep in mind, this is a 1-bedroom up, 1-bedroom down with 2 bathrooms. And when I say 2 bathrooms, one's a powder room, one's a four-piece. So that's pretty high for a single family house right now.
Yeah, it's hard to even, I'm speechless.
Yeah, exactly. So let's look at Lowell, which is what you were talking about. Again, listed for $499. Again, in a very nice neighborhood, McLaughlin. So describe McLaughlin in terms of neighborhood.
Yeah, I mean it's your classic, a lot of minimum 40-foot frontage lots. A lot of them are 50-foot frontage lots, by like 110, 120 deep. So, no major apartment buildings or anything around it. A lot of like classic 60s bungalows. So, a lot of people love the area. It's just north of Highway 2. Or just near the Oshawa Center, the mall. You got easy access to the 401, which is the major highway. You can go north to the 407. It's kind of, I would say one of the most desirable areas, especially for investors.
Right. And we're just going through the pictures now. And, the house, you can argue that they've put in new laminate flooring at some point. But, again, it's not unison. Some bedrooms have carpet, like the living room has carpet, but some bedrooms have, laminate. So in order for you to find that same laminate and match it is pretty unlikely. So you'll likely have to rip out, everything and start all over again. We're looking at the basement right now. What was nice about this property was that the basement was completely open. So you had a blank canvas to work with, no demolition costs. So, demo costs can hit you around, $200 to $2,500.
And that's what I find. Like a lot of people, they really like the clean, well-kept property. They don't like to see, tenant belongings. They don't like to see older wall. Like they get more cautious of that, right? So the listing salesperson did a phenomenal job, staging or not even staging or presenting that listing, right?
Right.
Which again they got paid off for, for sure. But
Yeah. So this property, as we discussed, sold for $713. So This 2 years ago would have been the typical bungalow, or even a year and a half ago would have been the typical bungalow that an investor would be all over and the general public would stay away from.
Yeah.
Because the general public could likely buy a bungalow of this nature, done to a certain degree, 50, 60% renovated and livable for around, 610.
And legal 2 units
right?
were 600,000,
Yeah.
right?
So now, this at 713, I'm maybe safe to say that maybe it wasn't an investor, it was someone who was going to buy this and live here long term.
And it could be, right? Yeah. And that's the thing. We don't understand what the buyer's mentality was, and this is it. I think it is more the latter of what you were saying. Is people are looking at it like a good neighborhood, a good quality house that they can design. They can put $100,000 and make it however they want, and have a really nice house in an area that is projected to keep rising.
Right.
So this is why we're seeing the high prices, right?
Yeah.
So
Yeah.
totally makes sense. If I found that was an investor who bought that, I would be concerned.
Yeah. Okay, so let's move on. So let's look at something a bit more turnkey. So this is in the Donovan area. Again, Donovan, we would say, is an A-type neighborhood, close to the highway. Fairly close to, I wouldn't say fairly close to downtown, but easily accessible to downtown. This particular property had 3 bedrooms up, 1 bedroom down. It had 1 4-piece bathroom upstairs, 1 4-piece bathroom downstairs. If we go through it, this is a beautiful property, very well done in terms of the construction behind it. And this one sold for, I believe, $830, but let's just go through the pictures quickly. Nice, beautiful bathroom. So this is way more than a typical investment property that we would see. It's more of a single family home, but the type of property that it is subject to a conversion that you can do. So this sold for $850, in fact. So again, a very high premium. Let's see. Oh, I really like this one. So duplex in Whitby, downtown Whitby. So this was 305 Beach Street, was listed for $749, which I thought was a fair ask because of its location, because of its size. I personally walked through this property and the upper unit was huge. There was, I would say the upper unit was probably 2,000 square foot in itself.
Really?
But you have 3 bedrooms upstairs. You have 1 bedroom in the basement. So the basement was really tight. But nevertheless, let's go through it. The lot itself, let's look at the lot size cover. So the lot was 50 by 90. So in term of frontage, great, but in terms of depth, it was really short. So when I walked to the back of the property, you didn't really have that big of a backyard for your tenants. So the upper tenant was using the side of the house as a backyard, and the lower tenant was using the back of the house, which was again still very tight. But let's just go through the pictures. As you can tell, like the landscaping on this property, the outside exposure isn't the prettiest. I thought that, we're looking at the parking right now. I thought that the parking was tight. So if you had tenants that had 2 cars upstairs and you had a tenant in the basement, like, I don't know how you're going to fit cars on this driveway.
This is what's wild to me. Like, this is not
Yeah.
like, it's nothing impressive. Like, it's siding, little
Yeah.
single car garage.
Yeah, so this is the upper unit. As you can tell, like the floors are, the old school, like square hardwood. The ceiling is not drywalled.
Yeah.
Let's just go through some of these pictures. This is the side backyard that I was talking to you about that the upper tenant would use. Kitchen, outdated, nothing, impressive here. But then, let's see if we can get to the basement. A lot of square footage, as I mentioned. Now we get to the basement. The basement is, the kitchen was very tight. You look at this kitchen, you say, there's 6 cabinets in the kitchen. The living space is tight. There's 1 bedroom. The bathroom is tight. So let me see if we can find some backyard. So this is the side yard, and then this is the backyard for the back tenant. So again, very tight. And this sold for $895.
Yeah, it's wild to me.
Which is crazy.
Yeah, we like the house that we currently live in, we bought 2 years ago in Whitby, downtown Whitby, similar to this. We paid $575, and it's way nicer than that.
Right. Yeah.
So I'm going, holy crap.
So you have a nice comparable to work with.
And that's what I mean. Like, we're not considering to sell at all, but it's still like nice to see, and it's just wild.
Right. Excuse me. Okay, and then Stevenson Road. This is this was a property that I excuse me that I put on my investor email list. This is a 4-plex right on Stevenson Road, so right across the Oshawa Center. A lot of our viewers have likely driven past this property.
You can't miss it.
You can't miss it. It's really unique in terms of its outside exposure and even inside. There's a lot of
sugarcoating.
Okay, you describe it.
This thing
as I go through it.
I think I described it last week as if you wanted to do marble countertops, you could outfit a 12-plex with the amount of marble in this.
Yeah. I don't know if it's marble, porcelain, but very bizarre.
Yeah, it is like just. Yeah, you have to see it to believe it. I think you're showing people can see pictures.
Yeah,
of it
going
now.
through pictures. We're in a unit now.
I think it's hideous. I mean, it's phenomenal location, but not my style.
Mm-hmm. So as you can see, like from the balcony, you're right across the Oshawa Center. I mean, and I mean, being right across the Oshawa Center also means that you're very close to the GO bus station, right? So again, I don't know if you want to attract those kind of tenants, but from an infrastructure perspective, maybe it does help if you just think about fundamentals. But yeah, again, more pictures of the units, and you can see all the tile work that they've done. So this was, and like the bathrooms, like there's a bidet in here. Like it's excessive, man.
Well, that's what I mean. You're not like the Oshawa Center's great there, but I mean, what was the parking situation like on that?
So let's get to it. Let me just show people. The outside of the house. So each unit kind of has like a balcony section or like a walkout. And then the parking situation, as you can tell, there's two garages that I guess people can park, but the parking is on the side of the house, and there is enough space for at least 1 car per tenant. But it looks like the back of the property also has a room for some cars to drive past it.
Yeah.
I want to jump into the numbers because you didn't like this property, right? From a purchase point of view. I put it on my investors list. Unfortunately, no one responded to it. I don't know if it was because of the price or, people are just thinking that there's no way a fourplex is listed for $1 million in Oshawa. But let's just go through the numbers on this property. So I essentially said that I called that this property would sell for 1.2 million. So assuming purchase
$300,000 a unit.
Yeah. So in comparison, what's a bungalow selling for? What's a duplex selling for right now?
$350 a unit.
$350 a unit, right? So that's 1.4 million if you were going to buy 2 duplexes, which would have 4 units.
Yeah.
So on this property, you're getting a unit for 300K.
Yep.
Right. So it's slightly cheaper. So 120 purchase price. Let's just jump to the monthly income and expense. So
what did you have rents at?
So rents were $6,200. That was based on current tenants paying rent, everyone up to date,
So
no
similar to
arrears.
like 3,100.
Yeah.
3,100 would be
Yeah.
a legal 2 unit, which is pretty comparable, maybe 3,200.
Yep. Yeah. So the mortgage, I'm assuming, is 20% down at 1.7%, 30-year AM. The mortgage payment would have been $3,404. Property taxes were $513 a month, and then insurance was $500 a month. So that was the kind of the fixed cost. I budgeted gas hydro, 140 for gas, 140 for hydro. I'm just estimating here. I would say that was for the common area, and tenants were paying their own portion of water and hydro, gas, hydro, water. And then we also accounted for a 4% maintenance and a 3% vacancy. I took out property management because I think a 4 unit you can probably manage on your own, but let's just put property management in here at 8%. So I have a cash flow of $573 a month on this property, with it being outsourced to a property manager. If we take the property management out, that's $1,000. But let's just leave property management in there. From a return on investment perspective, if we look at our 5-year return, so our mortgage pay down after 4 years would have been $128,000. We would have had $34,000 of cash flow. That would have brought our annual ROI to 12%, which is not bad. Even the debt to service ratio is above 1, which is great. And if we put a 2% appreciation in there just to see what numbers look like, that would have driven a 21% ROI.
Yeah, no doubt, great numbers, right? Like, it's not necessarily numbers wise. It looks good, right? To me, it's just would I buy, 2 legal 2 units if I could for $700K in McLaughlin.
Yeah.
Over that, I think I would.
Yeah.
That's just me.
Yeah.
That's just
Yeah.
me. We also talked. There was a 6plex in Malaga,
Right.
Which is South Oshawa, not a good area, but it sold for around $1 million, and it's a 6 unit. So, rents were below market, so you're not gonna, the numbers aren't gonna look as good, but there's more opportunity for upside on that one. So yeah, I mean, it really depends on what your goals are. I think, the person who bought, like, to me, that's not as crazy as like the Lowell purchase. If that was
Malaga or Stevenson?
No, like I'm saying Stevenson, like versus like Lowell or some of the other, even though the legal 2 unit whip you for $900,000,
Right.
that doesn't make sense to me,
Right,
right? That
right.
better be an end user or someone who's moving into it.
Yeah.
The numbers still work on the Stevenson one. I think it looks hideous, but
Yeah,
hey, maybe
yeah.
people like that. The location, as you mentioned, is phenomenal. So yeah, I mean, hey, it's not something I would buy, but it doesn't mean it's a bad investment.
Right. I think that's it from a market update perspective. Oh, I wanted to talk about one other thing. In terms of development, we wanted to kind of talk about Oshawa and what's developing in Oshawa. This week, I saw that the city of Oshawa posted on their LinkedIn page that Atria Developments is developing 47 Simcoe Street South, which is the old Canada Post Office, the former Canada Post Office. This is a nice rendering of the property. I'm looking at this. There's a red Ferrari in this image, which I don't think we'll see. But hey, nevertheless, it's a nice building, and I think what they're going to do is they're going to try and keep the outside look of the Canada Post building, but kind of build up. Downtown Oshawa is really, the city is in favor of high density and allowing developers to put up high-rise buildings. I know Atria Developments has had a few buildings there now, right? So they had one building, right here, 100 Bond Street, which is a fully leased 12-story residential building.
Yeah.
Fully leased. That's impressive. And then
just the rental market we're in, right?
Yeah.
It's just so competitive, right?
Right. And then they also developed 80 Bond Street, which is a 20-story, they're in the process of developing, right?
Yeah.
A 20-story, 370-unit residential high-rise building that's being developed there. And they're also working on a Parkwoods residence, a 14-story office conversion at Center and Bond. So
it's great. I love it. I think this is what the downtown needs, right?
Yeah.
More residential to support the businesses there. Any business downtown Oshawa has just crumbled and struggled, right? So,
yeah.
It's. I think it's great for downtown Oshawa.
Right. And then we were going to touch on GM.
Yeah.
Do you have any news on that?
Yeah, no, I from what I've heard, they're hiring again for their assembly plant, their truck plant that they're gonna put back into production, which was a big criticism of Oshawa a couple of years ago. People saying we rely on GM. We obviously showed people that look, it's only about 5% of the jobs in the city. It's not going to affect it, which it didn't at all, but it was more about that mental perception. But now having them back in is just gravy to me, right? I'm excited to see what they're going to come up with the autonomous track. I think I think there's more upside in things like that, right? It's great to have manufacturing jobs back, but again, it's just why Oshawa is booming so much and why we're so bullish on this area, right?
Yeah, no, I love it. So okay, that's that. We did a nice market update. We talked about some developments in Oshawa. What else do we want to talk about?
Yeah, I know this week we were, kind of the big news this week is more not in the real estate market as we're in, but in the stock market, right?
Yeah.
And do you dabble in stocks at all, or do you have any stocks?
I do. So it's funny because I was. I'll share a quick story. So a month ago, I was really looking at my portfolio and saying I want to dissolve everything in the stock market and essentially use it to go just double down on real estate.
Yeah.
I was in the process of doing that, spoke to mortgage brokers, trying to figure out maybe I'll do some private lending. But then the more I thought about it, and the more I read and kind of educated myself, there's always that theory of not putting all your eggs in one basket. And as I even looked more into like how big funds manage their funds, there's always a cap on what you hold, the percentage that you hold, and the different industries that you hold in. So I kind of decided not to dissolve and go all into real estate. I'd say still to this day, like majority of my funds are in real estate, but I still want to have a reserve on the side that's not real estate related, just to diversify. So
what percentage would you say of your portfolio do you have in stocks?
I would say around 20% is in the market.
Still pretty
it's
good,
still good, but I'm still, again, I wouldn't call myself a stock trader. I don't. I find
so you have someone managing
ETFs,
that money for you?
I have ETFs, index funds, cool. That some are actively managed, some are not actively managed. I'm hitting 6 to 8% annual on it, which to me is fine because this is supposed to be my extremely conservative, safe investment, right? So I'm okay with it. People can say, go into the stock market and do options and such and hit, 20%. One, I don't have the education to do that. I'm not educated well enough to do it. So in terms of stocks, I'm not buying individual stocks, not heavily. I do have a few stocks, but more ETFs that I just put my money in.
Nice, yeah. Yeah, I used to have stocks as well. I had, my own account. I looked into day trading. For me, I got too obsessed with the companies. I got too obsessed with, reading their daily, reports and news updates and, earnings reports. And it was good education. It was good financial literacy, to understand it. But I just couldn't take the swings, and there's something would be announced and the stock would jump or it would plummet, and it was too volatile for me. Maybe I should have had someone managing the money for me or something, but again, I just found like it was too easy to get in and out of, right? And I didn't really want to have someone else managing my money. I wanted the control of it, so it. For me, I did what you thought you were going to do. Is I pulled out all of my money. I have zero money in stocks now, and just have a good chunk of change for actively flipping in real estate. And that's kind of what we talked about. For me, I think you can, I look at flipping in real estate like being a day trader for stocks, right? You're active. You have a potential for a lot higher returns. You're actively working, right? Where I look at buy and holds, like you said, where you're in an ETF, you're in something more stable. It's a long-term play. For me, it was just like, what are you an expert in? What do you have your hands into? What are you, It's not to say that you can't, and I think there's people making really good money in the stock market and are really smart. I just felt like I wanted to, as you mentioned, focus on real estate and do both active and passive, right? People always debate like, flip or buy and hold. I'm like, well, do both. Like to me, if that's your expertise, you can make good active money flipping, and then put it into passive long-term holds that you hang on to. But
Yeah, I mean, for me, it was always when it came to the stock market and buying individual stocks. It was always around the logic of, I have no control as to how markets are deriving their value, or what causes a spike or what causes a correction, right? So the most recent would be when Trump was in power, and a tweet could just cause havoc, or Elon Musk makes a comment on Twitter and shares go up, shares come down. How do you manage that risk? Like, that's why
I think similar stuff happens in real estate too, though, right? So I mean, even when Kathleen Wynne announced policy changes, the real estate market corrected heavily, right? I still think it fluctuates on news, but not like the stock market.
Yeah, I think I would have to disagree with that, because when Kathleen Wynne came out in 17, that was a concrete plan that caught people by surprise, but it was a plan that came into effect. There was no, we're thinking of doing this, we're not thinking of doing this. It was, this is what it is, deal with it, and there was a correction, right? Can you?
But it wasn't based off the fundamentals, though. It was based off of a foreign buyer's tax and a stress test, which that's not what made the house prices drop. It was the perception that that's going to make the house prices drop, and it ran it out. Just like when GM announces in Oshawa that people are rushing to Oshawa because GM announced 3,000 jobs. That's a blip. But it's more of the mentality of it.
The foreign tax thing. Yeah, I agree. I think that do cause a bit of correction, but again, it wasn't a nationwide. It was Vancouver. I don't think it was. I could be wrong, but I don't think it was.
Correction?
No, just a foreign tax buyer tax.
Okay, it was started in Vancouver, but then it came to Toronto as well.
Is it in Toronto
Yep.
now? Okay.
Yep.
So I agree that the foreign tax buyer did cause something. I think, in my opinion, the stress test also, I think, brought prices down, because now people couldn't qualify.
But the stress test is still here.
It is still here.
And we're talking, the market's booming, right? Yeah. So that's why I say
the stress test is here. But when the stress test first came, interest rates were at 2-3%. Now interest rates are, you can get as low as 1.5.
But you still got to qualify through the stress test.
But the stress test is getting easier now too. They're cutting the stress test lower and lower. So you can argue both ways, but I think that that was, in my opinion, that wasn't just as random as a tweet, let's say.
Of course, that's what
Right,
I
and
mean.
that,
Like,
which is what I don't like about the stock
I'm
market.
on board with that. Like,
Yeah.
to me, that's why I left stocks. I'm
Yeah.
like, Elon Musk, what did he tweet because this is what is bringing up this conversation is this week is the GameStop
Yeah.
Reddit versus hedge funds where all Reddit users got together and said, hey, let's all buy this stock that is essentially a company going out of business.
Mhm.
So it has nothing to do with the fundamentals of the business. It is that news and herd mentality that is causing the stock to run up, and then the hedge funds are shorting it, going, this thing doesn't have any sort of this doesn't have any sort of financial backing.
Mhm.
The company's not a good company anymore, and
Yeah.
it's dying. So, I mean, this is my point. I think there is a little bit of in real estate, but I can handle that. That's not a big deal. In the stock market, I can't handle it when Elon tweets GameStop and then it goes up 100% in the next.
And I mean, like this is my theory on this, right? On this whole GameStop and hedge funds and yada yada yada. It's is there some sort of insider reporting? Like how are average day people on Reddit knowing
it's a public
to
open site and that people are just
but
like
where's the
congregating to
information
say-
coming from? Why GameStop out of all the 500 companies in
It
S&P?
started. Why? Because there was a hedge fund manager. I don't know his name, but he essentially came out and said that he is going to short GameStop, and it's now a worthless company. And because GameStop is like a lot of like sorry for this term, but like computer nerds that are like it's a gaming store, right?
Yeah.
Where you buy games and stuff like that. So they took offense to that and said, no, let's essentially try to bring this stock back. And I guess on Reddit, all congregated and said, hey, if we all put in $10,000 to buy the stock, it's going to run up the stock. And if if this other hedge fund guy is shorting it, it's going to cause him to either have to pay a lot of money to keep his short on, or he's going to have to buy the stock back, which will raise it even more. And that's what's happening, right? So it's this crazy market manipulation that's happening, from the public because of the internet, because of like that's a whole other story where you can say, look, this couldn't happen 20 years ago without the internet because you'd have to call 10,000 people on the telephone, right?
Yeah.
And it is market manipulation. And I know today like Robinhood app was like not allowing people to trade, so people are going crazy calling this unconstitutional, and it's super interesting to see. And again, one of the reasons why I'm not in stocks.
Yeah, I agree. It's the wild, wild west out there. Like
I enjoy
one. Like I have, I'm in a group chat with a bunch of friends, and like,
I got buddies
there's absolutely like 20 messages right now, and this is what people are talking about.
I got buddies that have no business doing stocks now talking about this, and it's super interesting to see because it's again getting people interested. And I'm watching from the sidelines, going, this is crazy.
Yeah.
I just wouldn't want my financial future to be tied up into this.
Yeah.
And again, the manipulation happens from both sides. One tweet that I saw was talking about how hedge funds, they are the central banks can print $4 trillion, and that's not manipulation. But if a group of people get together and pool their money to invest in a stock or buy a stock, shouldn't we use the word invest? It is what it is, right? So,
right. Yeah, no, that's awesome, man.
But anyways, we're getting down rabbit holes that we shouldn't be into, I think, with this real estate podcast. But it's interesting, right? And this is kind of what's happening in society and where we're at today, right? So
thank you everyone for watching our latest podcast. We enjoy doing this, so please like, subscribe, so you stay notified with any new podcasts that we put out. And if you have any questions, comments, feel free to put them in the comment section and we'll address it in our next video. Thank you all for watching.